Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. However, Wall Street is not trading today. We will give you a look ahead to the rest of the week and, of course, what's happening across global markets. Global stocks are steady as investors pause for breath ahead of key data, including US retail sales, Chinese Q4 growth data, and also UK inflation statistics. And big bank earnings continue with Goldman Sachs and Morgan Stanley on deck later in the week. And it's chips. China's military and government acquire Nvidia chips despite that US ban. Now, welcome to the show. I am Angeline Ong, and this is a new edition of Beat the Street. Now, markets, as I mentioned earlier, are closed for a holiday. This is Martin Luther King's Day. Treasury trading also closed, but you can still trade 24-hour indices on the IG platform. Just giving you some context and pulling up the volatility index for you. Volatility still remaining relatively low at around the 14.5 mark there, as you can see, coming off from the highs seen sometime in the last mid-November period or mid-October period. And it has certainly traversed there and not quite breaking above that 16 level seen around December. Markets also pausing for breath. This is other than the Nikkei, of course, but global markets pausing for breath ahead of those key economic data points that I mentioned earlier. And also, of course, there's all this talk about US rate cuts, these bets and the timing for the first US rate cut fizzling out. The stock 600 in Europe as well, down slightly as everyone waits on key data and those earnings from Morgan Stanley and, of course, Goldman Sachs, the big one, later in the week. Now, potential US rate cuts, as I mentioned earlier, to remain the main driver of the mood music in the market. How many cuts? When will they start? Two of the key questions investors are discussing. On Wednesday, we've got retail sales, industrial production, and to some extent, housing data will also give us further clues as to the timing of further cuts. Retail sales forecast to rise by 0.3% in December, month on month at the same pace as the prior month. Last month's data suggesting a relatively strong start to the holiday shopping season. Biggest rises recorded in food services and drinking places, up 1.6%, and non-store retailers up 1%. Industrial production forecast to fall by 0.1% compared to the previous month. And as for the NAHB Housing Market Index, well, that's expected to marginally rise to 38 for the month of January from 37 in December. December, which was the first month of a rise in 5. Now, the other key thing that we are watching for you is, of course, it is election year. Donald Trump, the favorite at the moment to push past rivals and stake an early claim to the Republican presidential nomination. And Iowans brave those extremely cold temperatures to cast their first votes in the 2024 campaign. Now, if Trump is victorious in Iowa, it would bolster his argument that he is the only candidate, the only option for the Republican field capable of taking on Democratic President Joe Biden in the election come this November. However, there's still a lot out there to play for. Many things could change. It's a long time between now and November. However, we can tell you that a Trump win in Iowa would also spell trouble for his challengers, especially DeSantis, who has wagered his campaign's viability on the Iowa caucus. Now, as I mentioned earlier, the banks will continue to be a key theme this week with JP Morgan and Bank of America already kicking things off last week. Of the 4 banks that reported, only JP Morgan shares managed to rise. It was a really mixed bag of results. JP Morgan shares managed to rise by 0.9%. Citi fell 1.2%, Wells Fargo down 2.3%, and Bank of America down 2.4%. All four banks had to set aside more money hit by the FDIC special assessment. Some banks also announced job cuts. Citi will pare back 20,000 positions over the next 2 years. Wells Fargo also set to cut jobs, and Goldman Sachs is the big one this week, set to report tomorrow. The investment bank forecasts to report earnings of $4.50 a share, which would be down on the $5.47 posted 3 months ago, but substantially higher than the $3.32 from the same quarter a year ago. Now, on the technical front, just showing you Goldman Sachs chart there on the wider term view, Goldman Sachs share price has broken out of a broad descending triangle in December and has since been testing a November 2022 horizontal resistance at 391. Now, the stock was quite volatile on Friday, but ended the session down around 0.5%. And then on Wednesday this week, Alcoa reports after the bell, the street anticipating a loss of 81 cents a share on revenues of $2.6 billion. 2023, a tough year for the group too, which only managed to publish one quarterly profit out of 4. Sales have not improved either, range bound all year between 2.6 billion and 2.7 billion. Just giving you a wider look at Alcoa's share price there, because as you can see, we are quite far off from the highs seen in March 2022. Aluminium prices remained weak for most of 2023, mainly due to concerns about the real estate market in China, which then led to slower demand from the construction sector. Alcoa's share price generally reflects more or less the aluminium performance in 2023. And finally, on Friday, there's Schlum as well. The market expecting earnings per share of 84 cents to be compared with 71 cents a year ago, and revenues just short of $9 billion. That would be 1 billion higher than Q4 last year. Now, one strength of this company is its international presence. The vast majority of Schlumberger's sales coming from international contracts. In Q3, for example, its revenues outside the US totaled some $6.6 billion, up 12% year on year, compared to US revenues of $1.6 billion, up only 6%. Therefore, this group is only mildly affected by the fall of US oil rigs in operation from 620 at the beginning of last year. They're now down to 500, according to the latest Baker Hughes count released last week. Like for Alcoa and aluminium prices, SLB shares have pretty much followed the path of WTI and Brent, at least over the past 6 months. And as we're on that topic, just checking in on the chart for Dominion Energy and American Electric as well. American Electric on a long-term view looking like this. This is American Electric Power. This is the long-term view. And just looking at that, because there was an FT story about how resurgent US electricity demand has sparked power grid warnings. This coming, of course, in a week when we are expecting many cancellations, 2,000, in fact, US airline cancellations. These are flights due to massive winter storms. And I can tell you that temperatures in some parts of Canada already tipping below negative 29. So a really frosty winter season there. Very different to last year when we were concerned about not enough snow in certain parts of Europe. Now let's take a look at chips as well, especially as geopolitical concerns between China and Taiwan are being watched. Chinese military bodies and state-run artificial intelligence research institutes and universities have over the past year managed to buy small batches of Nvidia semiconductors that were banned by the US from export to China. This is according to a Reuters review of tender documents. The sales by largely unknown Chinese suppliers highlight the difficulties that the US faces despite its bans in completely cutting off China's access to these advanced chips that could fuel breakthroughs in AI and sophisticated computers for military users. One other thing that we're watching out for you is, of course, Boeing this coming week. Although this stock not currently trading because the US markets are closed, but I do want to give you a longer term view of what's happened recently. As you can see here, this fall here where my cursor is, because Boeing, of course, being in the headlines after that blowout, the latest being the FAA announcing that Boeing will have further quality checks. Boeing will add further quality inspections for the 737 MAX after an accident earlier this month where the fuselage panel was blown off an airplane. This is according to Boeing's head of its commercial planes division as well. The FAA has said that all Boeing 237-9 MAX will also remain grounded until the review is over. Now, a key story that we've been watching is Microsoft, and Microsoft has eclipsed Apple as the world's most valuable company by market cap. Much of this driven by its focus on generative artificial intelligence, and this sector has been getting a lot of investor interest as well, which has perhaps given its stock a lift like many other tech stocks. At the same time, this comes as Apple has faced waning demand for its flagship iPhone, especially in places like China. Just bring up a longer term view of Apple for you, because like many of the other stocks, I'll show you, it has benefited in the last year, 2023. However, look at Microsoft's chart, which has also seen major gains. However, Microsoft, its market cap is now bigger than Apple's. And speaking of gains in the last year, I mean, indices, especially the Nasdaq, did have stellar gains due to that uplift in AI buzz, and also much of the interest in the late Santa rally. But the Nikkei has also done really well, really impressive run so far. IG's Axel Rudolph has been taking a closer look at the Japanese benchmark. Ax, is the Nikkei 225 on track for a new all-time high?
Well, Angeline, the Nikkei 225 continues to surge higher and has overcome the minus psychological 36,000 mark earlier this morning and rose to around 36,200 before consolidating slightly. And you can see here we've been rising since the beginning of the year and are targeting now the psychological 37,000 area ahead of, and for this I have to move out onto a quarterly chart, ahead of the all-time record high, which was made back in December of 1989 at 38,957. So that is our next big upside target ahead of the psychological 40,000 mark. And you can see here from a technical perspective, what has happened is that we managed finally to break through the June to November resistance area, which was made up of the 33,500 area or so and the 34,000 area. And once that happened at the beginning of January, we had a lot of stops being triggered. We had a lot of short covering, and we had a lot of new investors entering the market and pushing the Nikkei 225 higher. As you can see here, still further upside likely to be seen, provided we stay above today's intraday low, which was made at 35,552. And the trend's your friend, and it is still pointing higher.
Thanks very much, Axel Rudolph there from IG. Looking at the Nikkei, which already so far this year, taking a look at the chart there, is up some 7% so far. Now, before we go, let's have a last look at the volatility index, and it is looking but very low volatility at the moment. Certainly, this is likely to remain low until we get further economic data, the key ones being inflation out of the UK, US retail sales, and growth data out of China, and of course, those earnings from Goldman Sachs and Morgan Stanley. Well, that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.